Hello. How are you, my farm? This is another good day. It's on Wednesday. So let's check what the market is offering to us. Remember, today is tape reading. So let's first start. I hope your week have been good. So let's start with the XY or dollar index. Remember to like and subscribe to my channel. I go by the name Dunkin FX. I'm a boy when it's come to forex trading. So without further ado, let's start the stream. So yesterday was a bit tricky. Let me start with yesterday and how it unfolded. So yesterday, as you know, we look for the high of the previous day. Let me correct this writing. You just write the full name high of the previous day. High of the previous day. And then we look at the low of the previous day, which was here. If you don't have your setting which separate the session or the day of the trading, you might look up in a trading view, low of the previous day. So this is how it was. And in 8:30, that's when there was a retail MOM news which came out, and the market pushed up after taking this liquidity, which was the low of the previous day. And remember, in our strategy, we look for a continuation the low of the previous day, or we look for a reversal. And so I was anticipating for a reversal because this was the break of market structure. But then again, the market took out this liquidity, this from high of the day, which was formed in London session, and again broke the market structure here. So if I go down to scale down to 5-minute time frame or 3-minute time frame, you can clear see this break of structure here, and a return to a fair value gap here, which is also with an order block. And so this will be our entry, the high, that's our stop loss, and we aim for the low of the day, this which was formed. So this will be our business of yesterday, but it was a bit tricky because of this move. So I anticipated for reversal, and I wanted a return to a fair value gap here. And so basically, yesterday I thought it was a bullish move, and that's how it is. Sometimes you get confused, sometimes your mind is not clear. But looking at strategy, if I would have been patient, and more clearer, I could have seen this move. So enough of yesterday. If it was a loss, that's just a cost of doing business. Let's say cost of production. So it is what it is. So let's go to a 15-minute time frame and check now. So again, we look for the low of the previous day, which is Tuesday trading this day. Then again, high of the previous day, which is right there. And so now the strategy is playing well. So you can see this the break of market structure. Let me change the color appearance and make it a bit. Let me go. Which color will you? Let me go green. Yeah, and let me break of market structure. VMS, as you can see, and then there is this return to a fair value gap, which is directly on 8:15. So basically, we have our trade or signal, and now we should anticipate for long, which our stop loss should be just below this this candle. But to be more conservative, let's just the middle of this week there and aim for the high the previous day. So this is it. And because this is DXY, so let me go to Euro USD as they coincide with each other. I don't I already did my analysis this morning. And so as you see, the high of the previous day, low of the previous day, I was waiting for this break of market structure. This was broke, and then there's return to a fair value gap. So which indicates that we are going for shorts, or the bears are in play. You can put there and this high right there, and we aim for the low of the previous day, which is there. And because on a higher time frame, we are still on a bearish move, there could be a possibility we could also run through this liquidity, sell liquidity here. So good. So this will be our second target, which bring risk to reward 2.6. It's not bad. Basically go for 1 to 3 or 1 to 2.5 is ideal enough. So let me go down to 5-minute time frame. Let me scale back to 5-minute time frame. You can see the move have started. There might be a retracement in these levels because there is a fair value gap here. See this, all these are sell side, all these are sell orders, and the market always balance things, so there should be a retracement on these key levels here because there is a imbalance here for buy side basically. Let me scale back to 1 minute time frame. Yeah, so this is the business of today. It's not every day that you'll just open the market. Though I already did analysis earlier today, but it is not every day that you just open the market will open up at 8:30 and you will see your setup right away. Sometimes it's happen that way, but most of the time you just have to wait for your setup to appear. Remember, in this strategy, we look at the high of the previous day and the low of the previous day. We look for when we are in the low or high of the previous day, we look for continuation move or a reversal. Yeah, and we look at the kill zone. That's from 8:30 the market open until to 11. But from 8:30 to 9:30, we generally anticipate for a move, and when we see a fair value gap between there, you can act as a good entry or signal for market for entry in the market. Then from 10 to 11, there is also the silver bullet, as ICT called it, whereby you can anticipate for the fair value gap and enter in which the direction you anticipate the market to run towards. So this is just a matter of patience, and let's see how the business will be printed out. I'll be happy if these lows were taken out. This will act as a confluence. Our market is running toward the low of the previous day. So basically, this is the whole business right here. So how will you know if you are in the correct move or you are in sync with the market maker's direction? This happens when the direction you're anticipating creates impulsive moves or big moves. But when you see the market is slowly or in a consolidation like here, you see if people are in short here and you see the market is just consolidating. There's no any other bigger move, and you see then if this move to take out all this liquidity that was lying here to this order block, and then again, as you can see, a slow move. Again, we took out this liquidity, buy side liquidity that was lying here and here. We took out with this move. See this impulsive move. But as you can see, in general, we were on a bearish. This was just a retracement, and it took up to this liquidity and then ran to. You can see there is imbalance here. Yeah, the market shift the structure from this low here, boom. Then we return to our fair value gap here. This impulsive move, not generally impulsive. Yeah, you can see it's an impulsive move or just a big move where there is one direction or one color of pretend candles. If it's short, you'll see many short candles. If it's long, you'll see many bullish candles. So basically, if you see this here, if you are on a bullish move, this could have acted as a break of market structure, and then we should have anticipated for a retracement up to this key level here, and then boom for a bullish move. But we are on a bearish move, so this does not hold to account. You see how the market took out this low with this big with this big bearish candle. It's just an indication that you are so if it is your first day here, I stream mostly from Wednesday to Friday. Of if the market is if the environment of the market is good, I will stream on Monday, Tuesday, but generally I stream 2 to 3 days on a week, and that's actually how I trade. I trade 2 to 3 days on a week. Yeah, and so it's enough. I wait for another week. We look here, there might be a reversal up to this key level here. So let me just mark it. There's an order block here. Remember, this is 1 minute time frame. I look for my play on 15-minute time frame, but the buyers, I look for my buyers on a daily and weekly minute time frame. And then I scale down to 15-minute time frame, but for an entry and a good closure in the market, I scale down for 1 minute time frame to see the kind of the market is fractal, so the 1 minute candles will tell its story with conjunction to the higher time frame. So guys, you can write down in the comment below on how long have you been trading. If you understand this strategy, the law of the previous day and the half of the previous day is from ICT concepts in liquidity. Now, generally, the market works on arithmetic principles which which is driven by the liquidity, and mostly the any liquidity with low, the sell side and buy side liquidity is good. The recession liquidity, the low of the London, high of the London, and so on. But daily liquidity, that is the high of the previous day, they act as a magnet to the market. So the market will likely be attracted to those key levels. Anticipating for another huge move, should take out this low and so on. So let me go back to dollar index. See the business. So dollar index has taken this buy side liquidity here, and there is an order block here. So that order block should hold, or at least this fair value gap. There's an imbalance here, but sometimes the imbalance is not always filled. And when you see if the market leaves imbalances which are not filled, and you're in that direction, you know that the market is on a hurry towards the liquidity that is going to take out. In case, in that case, that will be our target. Days on Wednesday date 18 10/23. Remember, on a daily time frame, we anticipated for bullish move in DXY and bearish move in Euro USD. In DXY, the market run to our previous low of the previous day in London session, and broke the market structure, indicating a change in market structure. and a reversal move towards the high of the previous day. In Euro USD, we go to 15-minute time frame. High of the previous day is the market traded high of the previous day and broke the market structure indicating a change in market structure and a reversal move towards the low of the previous day. So it's 1 minute to 9 o'clock. In 9:30 there'll be the open of the commodity, which might inject some frequency in the market. So let's wait and see. Remember, there's an imbalance here we should take note of. Here, let me check for this rectangle here from that high. This there. Guys, you remember to like and subscribe to this channel to help push the algorithm of the YouTube to people who might want to see or gain some value in this live stream. You see this kind of a move where the market take out the this liquidity and break out here. So might be going long for a while. Then return. So let's check on the 15-minute time frame and see how the market is reacting. So on the long run, anticipating for this key level here, this sell side liquidity to be taken out maybe by the end of this month or the beginning of next month. Or we can take out this liquidity that is lying here. Our bias will change if the market will break this low here. Then we'll anticipate for short. But for now, we still hold our bias on the DXY and also on the euro. If we break this structure here, I will anticipate for the buys. But for now, we still hold our bias. It's good to be open minded because the market doesn't really do what you want it to do. Sometimes you just have to follow the lead. You let it create its way and you just follow. See the fair value gap is holding well. If we break this low here, I'll move my stop loss to high this fair value gap here. Let's look at the xy. Also, the dxy was able to hold. Actually, from this low, the low, but there's a order block here, so it reacted from that order block. Extend the line. Got 8 minutes to our 9:30. Let's see. Got 15-minute time frame. 5 minute time frame. Check on a 3 minute time frame and 1 minute time frame. (3 minutes to 9:30). (1 minute to 9:30). Commodity open. Let's see how the 15-minute candle closed. Look at DXY. We take out this low. I'll move my stop loss to this high of this fair value gap. Let's see how the 15-minute candle close. this X1. So if just break out this low, so I said I'll move my stop loss to this low, this high of the fair value gap here. And I'll take like 30% partial profit. So you say partial profits always pays. If you trade between our target and this low here, if we trade in between, I'll move my stop loss now to break even and take out another 20% partial profit. We remaining 50% and the trade will be now free to run. So 9 minutes to 10 o'clock. extend this line. Just look at the XY, the dollar index. So we took out this buy side liquidity. Three minutes to 10 o'clock. 1 minute. Actually, it is 16 seconds to 10 o'clock. You see how the 15-minute candle closed? 5 minutes. 3 minutes. And 1 minute time frame. So we are still, oh, we are still, so we are still trading on this area. That's why I told you guys good to take out some partial profit and move your stop loss. It's a good risk management. Remember, our target is not always guaranteed. So let us look at the XY. Dollar index. Take note of this area. You see how the 15-minute candle flame has closed. So today is a high resistance trade. As you can see, the market is just playing around, consolidating, not that of a movement, but still our trade is still valid. This point I'll take another 20% of the initial risk. So I'll take 20% partial profit, which will now amount to 50% of my initial trade, just because how the market is consolidating this area. Then if you broke this low, I'll move my stop loss to break even. So actually there is a high chance that the market want to run to this liquidity here. Because of this break of liquidity here, it took liquidity by sell side liquidity here. Then you see the break of market structure, then a return to a fair value gap. And the time is 10 o'clock. See, this was 10:12, around 10:12. You guess there's another setup that is always available. So that this may be the setup here and run toward this liquidity, buy side liquidity here. See the DXY. So now be the time to move my stop loss to break even when I break this low. We look at 15-minute time frame. So we're about to hit our target, which is low of the previous day here. So we come back to 1 minute time frame. We say now I will take out another 20% of my initial position. Now the position remaining will be 30% from my initial position. So regarding how I told you from 10 we can see another we can see another potential, another opportunity. From here you see the market retrace to this order block that is here, this fair value gap, or this buy side liquidity, and this one take out those buy side liquidity, then broke the market structure again here. I return to this fair value gap here that was formed through that movement of breaking the market structure. Then it's a very good trade, and is a low resistance trade. See, if you're not able to hold from this up and down movement, you can just wait from 10 to 11. There's always a very good opportunity to enter into the market. The low resistance trade. See, if you're not able to hold from this up and down movement, you can just wait from 10 to 11. There's always a very good opportunity Now I'll move my my stop loss somewhere here. That's fair value gap, and let the market do its thing. So our first target has been hit. Let's see how the DXY dollar index also has already reached to our take profit, which was here. You can see a 15-minute time frame. That was the high of the previous day. The risk to reward of 1 is to 3. So that's how the business was printed. That's how the business has been printed today. It's been a wonderful Wednesday. Back to our Euro USD. See the Euro USD also hit our target, our first target, which is the low of the previous day here. And there might be a potential to take out this buy side liquidity that's just below the low of the previous day. We are still on our time frame from 8:30 to 11, and it's 19 minutes to 11, and we call it a day. Let's see how the 15-minute candle flame has closed. Let's see how it has closed. 15, okay. Our trade is still on play. We're still on. So remember, this is live tape reading. And see, and if you like this stuff, you want to see more of this, please click the like button and subscribe. I'll be doing this more often. 2 to 3 stream in a week, because I always trade 2 to 3 days, 2 to 3 days in a week. Yeah. Then the rest, I'm analyzing, backtesting, and learning about the market. It's a continuous journey, and the main thing in this business is consistency. That's the name of the game, consistency. So as I told you, I'll move my stop loss to this area and then take out the remaining. The remaining was 30% of the initial position. We'll take another partial profit of 20% and let the 10% run the second to the second target. So let's look at the XY. So the XY, so I told you this will be another entry from 10. From 10, is 10, 10, from 10 to 11. You see, we broke out the 10th candle actually broke out this liquidity, this buy side liquidity, then return to this fair value gap that was left here. Yeah, I will enter also there, but I will enter after we broke out this. We are looking for a second scenario where we would have entered a second entry. Yeah, breakout. No, not this structure, but this one. Just take that off. Take this down here. Now break out this structure, and then this bearish candle is a very good indication that the buyers are still on, and that will be my second entry here at 10.28 and 27, and let this a low resistance trade it up to our target. So it's good if you are in 8:30. From 8:30, remember our setup always show up from 8:30 to 11, and so if you are on it, just have entered after this break of market structure. Remember, this line here is our previous day low of the previous day, and so just breaking out there and returning to this fair value gap, and also this line or our previous low of the day could act as a resistance, if you want to call it. on these scenarios of support, because you see the market just weak there, 831, and boom, we entered. But if you could not have entered here, there is another opportunity here at 9. So in between 8:30 to 11:30, you should not just rush to the market. You should be patient, because there will always be 2 or 3 optimum entry for precision trading. Position precise. Remember, we are not perfect, and you should strive to be perfect. But in this market, it's very hard to be perfect all the time. Remember also, our target is not always guaranteed, so partial profit always pays. And if you have a bias, just hold on to it, because remember, when we are here, the market was just weak and up and down, very slow movement, and some huge impulsive to upwards direction or bullish move, which could have tricked you into believing that the market have changed its direction. But because we are trading on the higher time frame direction, which is on a daily and weekly, just hold your horses, sit on your hands, and let the market do its thing. So 8 minutes remaining till 11. We shall call it a day. See how the market is behaving just at the low of the previous day level. It has taken the liquidity this week's here. Now there might be a possibility to return to this imbalance. There's balance here. You see all this is sell side CB. Here. That's why I put my stop loss here. And then boom. We might just trace to this order block here. And then run to our second target. But right now it's also good not to take all the morning session move. We just take a little chunk of it. So even taking out the whole position here, it's a very good idea. You don't have to spend your time just checking if the market hit your profit or what, or just move your stop loss to this position and let the other remaining 10% move to second position, which is about 10 pips. Yeah. So this move from here was about about 30 pips movement. Yeah. So 5 minutes to 11. Let's look at 15-minute time frame. We're able to see the whole picture. So let me repeat the basis of this strategy or entry. We look at the low of the previous day and the high of the previous day. That's basically what we look at, because this is the main key level that the market or the algorithm will be attracted towards. as you can see here, we moved from the low of the previous day, and when we hit the high of the previous day here, we was able to push through with this candle here, and then a return to a fair value gap which was left here, and boom, and now this was the high of the previous day, which was on Tuesday. The market just gravitated towards the high of the previous day as usual, but this time, remember, when we are high on the previous day, we look for a continuation move upside or a reversal, which will be now downwards toward the low of the previous day. And in this case or this scenario, this break of market structure here from this low, this liquidity was lying here, and this imbalance or this huge movement was indicating that we are the market's now in play with our bearish side. So we're just waiting for a return to a fair value gap, which is just here between this high, this candle, and this low of this candle. In between, see the wick just touch it, and you see the board even didn't close in that area. And so this was ideally this will be our entry or optimum entry, but remember it was on 8:15, and we look up from 8:30, and so from 8:30 here, this will be our entry, or another entry from 9:15. So from here, and we are sure now we are on play, not sure because there is a possibility in this market do what is want. So there was a high probability that now we would run towards this liquidity here, which is the low of the previous day. So let's look at 5-minute time frame. See, when we zoom closely to our 5-minute time frame, you can see this area here from this high this week to the low of this candle. Right there was our fair value gap, and boom, there was another fair value gap here, which I outlined during the stream live. From here, then I was anticipating the break of this low, which we are indicated with this line, and then a return also to a fair value gap or this order block that was formed here. So we look for fair value gap or order block or imbalance. Those are our PD array. Then this will be act as our entry, and see the time 10:20. Between 10 to 11, another entry or another possibility for an entry, and that move was very fast. It was a low risk trade there to our target. Let me zoom in, you can see clear. See, and I started this with a risk to reward of 1:2.5, but now as we are going on taking partial profit and moving our stop loss, I see this could have been a 1:13. So you see, risk management is all about how you monitor your trades according to your levels, and you move your stop losses and taking out some partial profit, because then again our target is not always guaranteed. So to be on a safer side, it's good to take out some partial profit. Now it's 11, and then come down for today. We'll let the market run. Yeah. So guys, remember to like, share, and subscribe. Yeah, if you gain any value from this live stream, I'll be doing them either 2 to 3 live stream in a week. That's how I normally trade, from mostly Wednesday, Thursday, Friday, or if I get an opportunity on Monday or Tuesday. Between those 2 days will be Monday, Wednesday, Friday, or Monday or Tuesday, Thursday, Friday, or Tuesday, Wednesday, Thursday. It depends with the condition of the market. But normally I will trade 3 days in a week. I know it's day trading, and people think day trading is trading every day. Yes, and every day you will always see a setup every day, and it will never stop. But the thing is, you have to control yourself. Yeah, and you just have to let the market do its thing, and wait for your opportunity according to your strategy. It depends on how the strategy or the setup you're trading with your model, how it's appear, and even specific time. New York session, London session, the specific time. If it's London, from 2 to 5. If it's New York, from 8:30 or 8 to 11. It depends. So that's now for today, guys. Thank you for being with me. I appreciate you guys. I love you guys. Thank you for the support, and see you on the next one.